All right.
We're live.
Ooh, he made it work.
Got it?
He made it work. KK in the house.
What's up, KK? Great to see you guys.
How you doing?
We're going to talk about some good stuff today.
iPhone or Android? What are you guys using?
CPE came in. Yes.
I love
yesterday,
iPhones.
this morning,
KK, we're going to have problems. I am not a fan of iPhone. I have one, and I use it every day, but it's garbage. It's for children.
Damn. Garbage, he says.
Yeah.
Straight garbage.
But I love you, KK, so we're all good.
I think somebody making a fake account of you guys and DM'd me. Aw, shit. Emily,
What?
can you please send us
text
screenshot, text us. We want to get on those people and make sure they never see the outside of a jail cell. Okay.
That's confusing to me.
That was a little rough.
I don't even know. I gotta unpackage that. Like, what are you saying?
Are you saying that somebody yes, I can reach out. Thank you, Emily. We appreciate you. We don't want anybody forecasting and taking advantage of us or our good name, because we work really, really hard to make sure you get good advice. There's a lot of junk advice out there.
Dude. So tell me, what are they trying to do, Emily? Are they trying to be Chris? Are they trying to be Lee? What are they trying to do? And then for the rest of you, if you are here watching, this is for real estate and mortgage questions. Ask us about rates. Ask us about down payments, scenarios. Ask us about your situation. If you have bankruptcy, student loans, whatever it is, we can answer all your questions right here, right now, live.
Is it a good time to buy? What are the interest rates? What happened with CPI? What happened with CPE?
What happened with Kennedy?
What does CPE even stand for? What does CPE stand for? It came in this morning. So that one is a very, very, very important factor, probably more important than CPI. What's the process of house hacking a duplex using my grown child as a primary residence?
I like it.
Cool. Thank you, Emily. We appreciate you. So the process of house hacking. So house hacking, if you put it into the internet, it's going to have all kinds of definitions. But it boils down to this. Can you get more for your situation than you're putting into your situation? That's the easiest, broadest term. So let's say you bought a duplex. And so you're getting more out of the situation than the average person. That's kind of a house hack. There's a little bit more to it, but it depends on who you talk to. And we can do it all the way up to 4 units. If you're going to go FHA, VA, Fannie Mae, or Freddie Mac, you can go 4 unit on any one of those loans. USDA, can you do 4?
I'm not sure, but I'll see.
Okay. So
I can look into it.
if you are going to do it, grown child, if you're a grown child, that's his primary residence, and you want to be a non-occupant co-borrower, that can happen. That can happen. If you want to use the rents from the other unit in order to qualify, that can happen. If you happen to have a fourplex and you rented 4, the count's pretty high, you rented 4 or 3 of the units and you lived in one of them, that can happen. There are many ways you can take advantage of house hacking in order to make sure that you got the best situation that you can. So if you want to do it, let's get you qualified. Let's get you going. Where are you guys at? Do you want to know about the down payment assistance programs? We're going to tell you. Do you want to know what the interest rates are today? We're going to tell you. Do you want to know what's happening now that CPE came in? CPE came in this morning, in case you didn't know, if you don't follow the stock market. If you do, tell everybody what CPE stands for. CPI came in last week. CPI came in at 3.2%, and we expected 2.9%. And when that happened, the bond market freaked out and went up, bam, 50 basis points, as much as 100 basis points in some spots.
What's that mean? What's basis points? What are you
Basis
talking
points means that's what the interest rates are. And right now, if you went to the New American Funding website, you would see 5.75%. 5.75%. 5.75. If you would have went there 10 days ago prior to CPI coming in, you would have seen 5.25%. So the difference between 5.25 and 5.75 is 50 basis points. See? 50 basis points. So that's what a basis point is. And it has gone up. Now, CPE came in. And it came in right about where we expected. There was a few things that came in better, a few things that came in worse, but right about where we expected. So, what does that mean? That means that the sky is falling, the sky is falling. Everybody that was professing the sky is falling and the real estate's about to crash last week, when they saw CPI, they're like, hey, that could be happening. But now that all these other numbers have come in, it's not so much. So everything's kind of stabilizing again. And the uncertainty spread is probably going to drop. I don't know that for a fact, but it's probably going to drop. I anticipate over the next 5 days, small interest rate reductions, just because the banks are trying to get competitive again, and we're trying to make it go through.
Sylvia G, when's the next meeting where they discuss the rates and when we should expect rates to go down?
Dude, well, that's two different
Y'all
things.
want that.
The next meeting is in March. So next month, tomorrow, March.
Dang.
Oh, tomorrow's March.
Dude, we're almost done with first
Dude,
quarter,
29th.
guys.
Today's the 29th.
We're almost done.
29th.
Leap year.
29th.
Today's leap year.
Today's leap year.
Oh my
So
goodness.
March, but that's not when we expect it to go down. For a while, the stock market was expecting to come down, and that's why interest rates came down for a little bit, because Vegas was actually putting the bet that things were going to go down. However, as soon as CPI came in and the Fed spoke, they're like, yeah, no, this isn't going to happen. And it's right now at 6% that they will drop. That's the odds in Vegas. 6% that they will drop the interest rates in the March meeting. Nobody believes they're going to do it anymore. Nobody. And because of that, rates went up. They spiked as much as 100 basis points in some banks. However, the meeting after the March meeting is going to be the May meeting. And that one's kind of like 50-50 right now. Where everybody's putting their money is the June meeting. Holy smokes. June is kind of a bit of ways away. I mean, if you're holding your breath, that's a long time to hold your breath. So that's what's happening. Cool.
Ruben Montemayor, he's the one that asked about house hacking, and his question is, so is my child's credit a factor or just mine?
Your child's factor, if he's going to be the primary occupant and the primary on the mortgage, then it absolutely is a factor. And you also have to have some income. I'll tell you what happens sometimes. Sometimes we get somebody that, hey, I'm moving to a college. The parents are well off. They don't want to put the kid in the dorm. So they want to buy a house. And then they're planning on buying a 4-bedroom house, putting the kid in one of them, renting the other 4. And then when the kid leaves, they're going to sell the house and take the profit. Good idea? Yeah, solid. But when we say, hey, this kid is going to live here, the underwriter says, okay, cool. What kind of money do they make? Like, what do you mean they make money? They're going to college. Yeah, but if they're going to college, they can't support any payment. So many times I've seen the underwriter say, hey, listen, I need some contribution. It can be 10% contribution. So they work at Starbucks and they put, I don't know, $200 a month towards a $2,000 a month mortgage. So there's some contribution. Then the non-occupant co-borrower can come in and cover the other 90%. That's parent. It has to make sense. Why would you do that? You just tell the underwriter, and the underwriter says, hey, that's cool, but I need some skin in the game from the kid because that's his house. And we're guidelining it through FHA. So it has to be primary residence, and the borrower has to contribute something. In many loans, it has to be very significant, but in this situation, there just has to be something that makes sense.
Sylvia G, I'm currently holding my breath. Guess we have to keep waiting. Thanks.
Yeah,
Sylvia G, what are you waiting for?
Yeah, she's waiting for the rates to come down.
Oh, you want to refinance?
Yeah, are you in the business, Sylvia G? Because if you are, everybody in the business is kind of waiting for the rates to come down. But if you're a buyer, it's actually better for you right now. It's better for you right now because buyer's market. All day long, it's a buyer's market. And if you have the power to buy, shoot, you own this market. You can walk in and everybody will wait a minute, you want to give me an offer? Yeah, sure. Okay, I'm reasonable, I'm open. I'll do whatever you need me to do. That's what the sellers are saying to the buyers because there's not a lot of buyers because interest rates are high. But as soon as interest rates come down, ton of buyers, it's going to be a seller's market. And I can tell you that every loan officer, every realtor out there is waiting for the interest rates to come down because that's their livelihood. We have a lot of friends who have left the business. We were just talking about some today. They've left the business because they can't make a living. It's what's happening in our industry. So are you in the industry or are you a buyer?
This person's name is Mr. $500,000 in equity in a house trust, upgrading to an $800,000 house, need $300,000 loan, $100,000 income. Can they finance?
That's a lot going on, Mister. Ooh, Mister. I'm gonna play with that a little bit. Hey, Mister.
You're gonna play
Mister.
with
Mister. Mister. If it's in a house trust, I don't know what you mean by house trust. If it's a living trust, that's something. If it's in a family trust with an entity with an EIN number, that's something entirely different.
living trust.
So if it's in a living trust, cool, that's easy. That's easy. There's a person that's on the note, and whoever is on the note can refinance the note. Need 300K loan, 100K income. So if we get rid of the 500,000 and the 800,000, and we just say you need a $300,000 loan and you have a $100,000 income, cakewalk. Let's do it.
So I think it's much simpler than that. I think it's just selling his house and buying another. He just threw the living trust in there because it might be a factor, but it's not.
It's not. Now, if it's a family trust, that's different. A family trust has an EIN number. A living trust traditionally rides the Social Security number of the trustor. The trustor, not the trustee, the trustor. Trustor is creator of the trust. Trustee is who it's for and who's responsible for it.
Yeah, Mister, give us a buzz when you're ready, man.
Cool, man. We're here
We'll
for
help
you.
you with that $300,000 loan. We got another question over here.
Cakewalk, $300,000 loan. We do those
Taco
all day long.
Dom. Taco Dom 5.
Taco Dom.
5.
5. Yeah.
Currently the market, realtors started right now. A good time to get incentives so we won't be waiting. Yeah, you need to move on it now, man. Move on it now. If you really want to buy a house, now.
Buyer's market, man. All day. Do you believe it's a buyer's market?
100%.
Tell me why. Tell me your,
100%.
because you hear my position all the time.
100%.
What's your position on
Well,
why
I'll
it's a
give
buyer's
you a
market?
specific one,
Give me a
very
specific.
specific one, and this is actually our most recent challenged loan. Okay, so doing a loan in Texas, okay, and some last minute things popped up, so it's kind of taking up a little bit of time. Okay, now one of the agents, the buyer's agent's a little concerned that the listing agent is going to cancel.
Okay.
But the listing agent never gave any sign of cancellation, never gave any sign of backing out of the deal, never gave any sign of wanting this to end to move on to another.
Okay.
In a seller's market, they would cancel that in a heartbeat.
Oh, yeah.
In a heartbeat, because what will happen is there's going to be an offer right behind that, probably for more, probably an opportunity to close faster, probably cash, all these other things, and they would have X'd us right away. We are a couple days past the close of escrow, but that's more than enough for a listing agent to go moving on to the next because there's better opportunities.
In a seller's market.
In a seller's market. In a buyer's market, there isn't very many.
Yeah, because you don't have anybody. There's nobody lined up to buy that house.
Nope. And the ability to get more doesn't exist either. So right now we are in a buyer's market, and if you are that person like Taco Dom said, get pre-qualified, start shopping now. Will you pay a slightly higher mortgage payment for the next year or so? Yes. But if you can make that payment for 1 year, you're going to make so much money in equity, and that payment's going to drop once you refinance. And who doesn't want that?
Everybody's going to refinance. Everybody's going to refinance. Anybody who bought now at 8% or 7% or 6%, you're going to refinance. Even our buddy here who's saying rookie numbers, Ryan, rookie numbers. I need $1 million loan. Yeah, even if you got the $1 million loan today, and let's say you have great credit and you were able to pull off 6.25%. When rates are at 4%, you're going to refinance. And shocker, to get that 6.25% on $1 million loan, it's probably cost you 30 grand, 40 grand maybe.
Yeah, big money.
Yeah.
Cindy Jan 23, how much time has to pass after settling credit cards and have a 580 credit score? So I'm assuming they paid down debt and they currently have a 580. How long until that thing bumps up? So for creditors, they're all different. They all report to the bureaus on different days once you pay them. A good solid number that I found, just from experience, is that most of them should be updated by the 15th of the month. So what I would say is on the 16th, pull your credit. It should all be there. And if not, all you have to do is call each creditor and say, hey, when do you report? When do you report? When do you report? And then once you know those dates, after that final date, everything should be updated. But if that's not happening and you want to move fast, let's say you're like, hey man, I need this credit to get up because I need to buy a house like now. What you do is you get in touch with us, give us the zero balance letters from each creditor that you paid off. We'll force the update today it'll be done. Probably today's Thursday. By Monday.
Yep.
By Monday it'll be done, and you're off to the races with better credit scores.
Because we're involved in finance, we have the ability to force a rescore, which means we can make it go faster because people's livelihood depends on it, and quite frankly, because the banks are politicians and they push the people.
Yeah.
Hey, if you're having trouble with credit, there's a lot of laws and a lot of systems to help you, but time is not your friend. It's not going to happen fast. You go like, hey, I paid this off. Sometimes it doesn't show up for 90 days. It's crazy. And we tell everybody, they're like, hey, listen, I paid it off, but it's not reflecting. I paid it off. I'm not reflecting. So I say, get me a letter from the creditor saying you paid it off, and then I send it to the credit reporting agencies, Experian, TransUnion, and Equifax, and I force it with some material evidence, and they'll immediately update, and they'll give me a rescore right then, right in that moment.
Boom.
So there's a way to do that.
Christian Wilder 04. Disadvantages of using a cosigner for a homeowner.
You give yours and I give mine because that's a very deep one. Yeah.
So trust is the biggest deal. That's the first thing that comes to mind is trust. Because let's say it's boyfriend, girlfriend, or even husband, wife. What is going to happen is that one of those people wants to make a move and one of them doesn't, and you don't have a solid symbiotic situation, and your guys are pulling directions this way. I've heard of some scenarios of where one person was like, let's sell and move. The other one's like, nope, not selling, not moving. And there's not much a person can do in that point. And if the second person doesn't want to move forward. The other thing is, there's a lot of people that aren't so nice. They're not so nice. And I heard this a long time ago. The person that you marry is not the person you divorce.
Damn! You said that?
So in that situation, things can get ugly and greed kicks in. So my thing is, for a homeowner, if you're going to get a cosigner, let it be someone that you trust. And when it's time to refinance them off, make sure they're going to come off, because that's usually the goal. What's yours?
So, disadvantage using a cosigner for the homeowner. So let's just say that you are buying a house, you're the homeowner. And now you say, hey, I can't afford it. I'm going to ask my mom to cosign. So now you have two people, non-occupant co-borrower. She co-signed for you. Well, here's the news. You're both on the loan. Why? Because you need it to be. Co-signer, you're both on the loan. When we close the transaction, you're both on the deed. So now you're both tied to this situation, okay? So can you just take mom off because you wanted to? You need mom's approval. And if mom says, as long as I'm on that loan, I'm on that deed, you can't take her off. You can't. So that's a disadvantage. Well, there's another disadvantage. Mom says, hey, glad you got your house. You make your payment. Good for you. I'm going to go buy another house over here. And then we pull mom's credit and we go, hey, do you own this house? Oh, that's my daughter's house. No problem. And you're like, how long ago? 6 months ago. Yeah, you're going to be liable for that liability, Mom. You have no choice. Here's the catch to that. It was a year and a half ago. Okay, cool. Has your daughter been making all of the payments through her bank account? Yes. Okay, can we prove it? Why, sure. I talk to my daughter every day. It's great news. Cool. Have your daughter provide us 12 months of bank statements proving that she made the payment out of her bank account, and I can ignore it from your side with an LOE, letter of explanation. So there's advantages and disadvantages. The advantage is you get to buy more house. The disadvantage is that, hey, you're both in the house and you both own the house. And when either one of you wants to buy another house, you both own a house. You're both in the house, or in the loan anyway. Yep. So there's the advantages, disadvantages from his side and my side. Cool.
And we'll ask the questions too. We'll say, hey, are you guys planning on doing anything this next year? Belinda, what closing cost payment assistance is there for 560 credit score asking for someone else?
Okay, good. Asking for someone. Yeah, I ask for someone all the time. So 560 kind of takes you off the board. Especially if you're looking for any type of assistance, yeah, it takes you off the board. Technically, I can do a loan at 580, FHA, 3.5% down. By the guidelines, technically. However, something caused that 580 that could give hiccups in the loan. Now, I can do a loan all the way down to 500 FICO. 500 on an FHA, 500. But you're going to need 10% down and cover all your closing costs, and you have to make this file look really good. So once you get down to that 560 FICO, if you're looking for assistance of any kind, off the board, even VA loans. VA technically there's no FICO requirements, none, zero, none. But it is a factor. It's not a requirement, it's a factor, because they do check your credit. They find out your reliability and whether or not you paid your debts on time. So this person that you're asking for, here's the tough news. They earned that 560 FICO. They earned it. They earned it by not paying the bills on time, by not applying to the agreement or adhering to the agreement that they went to a creditor. Something happened and they earned that 560. Now let's get past that and let's earn a 620 from that 560 to 620. And there's a lot of techniques to make that happen. But if you're looking for assistance at 560, not happening.
All right. So indeed, if I have a mid to upper 600 score, but too low maxed out cards, I'm thinking,
Okay.
Can I get a home? Yes, possibly.
Yes.
Here's the thing. When you max out your credit card, there's a payment. Okay, I don't care if it's maxed or if it has zero or $100. We just use whatever that is. If it's zero, we use zero. If it's 200, we use 200. It's just a payment. So could it reduce the amount you could buy? Sure. Could it push you out to qualify? Sure. It all depends on how much you make.
And there's some hacks to that. I mean, let's just say you have a $2,000 limit and you're maxed. You could call them up and say, hey, listen, can I get a $4,000 limit? Don't go spend it. Now you're at 50%, which is going to go better for credit score. If you're able to get it to 9,000, now you're at 33%, and all of a sudden you're golden in credit world. So there's ways that we can work with this.
Time for commercial.
Cool. You need a badass loan? Call a badass loan officer. You can reach your badass loan officers, Chris and Lee at New American Funding, by calling the number on the screen right now. Actually, don't call it right now. Call it after the live because we won't answer right now. Anyway, this is going to disappear in 5, 4, 3, 2, 1, bye.
Man, I'm trying to stick that landing. Indeed. Tasha, taking out a HELOC better than refinancing?
What do you think?
Okay, my turn.
Your turn.
So it depends. It really does depend. If you got that loan in 2021 and you got a 2.75 rate and your loan balance is...
If you're not first, you're last.
Getting paid down, then you may not want to mess with that, and you might want to open up a second one, okay? And if it's only for 10, 20, 30 grand, I would say, yeah, probably going to be a HELOC. But if you just bought your house, let's say you put a bunch of cash in, you do have equity, and your rate's already a little high, and you're going to refinance all at once, then maybe it's a regular cash out refinance.
Maybe.
But Tasha, here's what we're going to do, is we're going to do our due diligence, and we're going to share the both options, and you're going to choose what's better for you and your family. What do you think?
Good idea. I like it.
All right.
I'd say what you just said.
What's better, to own your own? Oh, what's better, your own down or DPA?
Graza's Creations.
Graza's Creations.
I'm gonna bet she's a realtor. Maybe you're not a realtor.
No,
but
I think she creates stuff. She's a creator.
She's a creator. Okay, cool. Graza's Creations. Here's what it is. Down payment assistance programs sound amazing. They do. They sound like phenomenal. Free money? Who doesn't want free money? And if you listen to the commercials, free money? Who doesn't want free money? But here's the reality. This is the reality. There is no free money. It's not free. It's never free. I wish it was free. It's not free. So I'll give you an example. If you went with the Platinum program, which is the down payment assistance program, and you said, hey, listen, they're going to give me the 3.5% down in order to buy this house. Kind of. Okay, cool. And then I say, okay, here's your Lee's loan estimate. And then you're like, hey, Lee, that's a ridiculously high rate. Why is that rate so high? I've seen it on the internet way less. I've actually been on your guys' lives and you guys say way less. And I'm like, yeah, that's because it's the Platinum program. Platinum sets your interest rate. And they don't set it at the low market. They set it at their amount so that they can make money. Now, is it down payment assistance? Technically, yes. Is it free? Not really free because you're paying for it in the rate in that situation. Okay, so that's Platinum. Let's say we went with CalHAFA, a different program. CalHAFA says, hey, we're going to give you 3.5% down in order to make this happen. All right, cool. And they say, all right, cool. I need you to know this is 3.5% down. You have to pay it back. Wait, what do you mean I have to pay it back? You have to pay it back. Yeah, when you refinance or when you sell the house. So you're like 2 years later and you're like, hey, listen, I got $30,000 in equity. I want to take out 20. And you're like, okay, cool, but you first got to pay back the $10,000 that you borrowed. So you only have about 20 in equity. And the fees are going to cost you somewhere in the neighborhood of $5,000 to $6,000 because of other expenses. you're only going to be able to take out 15 grand, maybe, if I can make this work. Well, wait a minute. Was that a free program? No, wasn't free. It's called a silent second. So in that situation, you did have to pay it back. It's a silent second, and the interest rates are actually pretty good on that one, but it's still interest. It's still interest. So was it free money? Not free money. You got to pay it back. Was platinum free money? Not free money. Got to pay it back. Here's my favorite one to kind of beat up on, and that's California Dream for All. Sounds amazing. Oh my God, it's Dream for All? For all. It's anybody in California. If you had a dream, this is your dream.
I had a dream.
Yeah, I have a dream. Here's my dream for all. Here's what I got. So California says, hey, listen, I know it's hard to buy a house in California. I know it's hard. Yeah. Houses starting anywhere in California, 500 grand. So let's just say, hey, Mr. State of California, I want to buy a house for 500 grand. 500 grand. Will you help me? State of California is like your uncle. He's like, hey, yeah, don't worry about it. I'll help you. I'll step in. I'll get you 20%. I'll get you 20% of $500,000. Simple math says 100 grand. Oh, Uncle Callie's going to step in and give you 100 grand. Uncle Callie. Yeah, I love Uncle Callie. All right, good deal. Cool. Oh, by the way, Uncle Callie works for the mafia. Wait, what? Yeah, Uncle Callie works for the mafia. Why do you say that? Because Uncle Callie says, hey, you know that 500 grand? That I got you 100 grand. Yeah, forget about it. We're in business together. What do you mean we're in business together? Oh, yeah, you got the house. Yeah, my 100 grand. I want it back. Yeah, I want that 100 grand back. Yeah, I want it back with interest. No, you know what? Forget interest. In California, we appreciate faster than interest. I want appreciation. We're going to share in the appreciation of our house together. We're in this together. We're good. Yeah, your Uncle Callie's here for you. We're going to get you 100 grand. And now you own a $500,000 house. You and the state of California and the bank own a $500,000 house. Oh, by the way, Uncle Callie's going to step in one more time and say, hey, listen, if only one of us can get out, I get out whole before you do. I get all my money back, all the appreciation, and if you happen to get some money too, good for you, man. Your uncle's here for you. Your Uncle Callie's here for you. Yeah, we're going to do that for you. Yeah. And then you say, hey, Uncle Callie, but what if I'm poor? What if I'm poor and I can barely make it? Don't worry about it. Your Uncle Callie's not heartless. He's not heartless. Hey, if you can prove you're poor for the last 3 years, I might let you pay 75% back plus appreciation. Maybe. But you got to prove it. You got to prove it. So, I ask you, is that a good program? I don't know. When I really think about it and I tear it apart and all kinds of stuff, I say, hey, if it means the difference between you buying a house and not buying a house, use it. But if you can do it without, every day, all day, every time, do it without the down payment assistance program.
Damn, we could have said 15 minutes so you started with that. Thank you, Thomas, Misha, Blessed Investor for the love. You guys are great.
Yeah,
Do me a
appreciate
favor,
you guys.
everybody, like and share this right now so we can get the algorithm going. So if you could just like it for me, I really appreciate it, guys. Thank you
Heart
very
us
much.
up, man. Heart us up.
Do that.
Give us the balloons. Give us the balloons. Blow it up. Put a mustache on this guy. He's already got one. Put a better one on him.
Bill Porter, or Britt Porter.
Porter, what's up?
Britt. What's important on bank statements? Savings or what I'm spending money on?
We don't give a shit what you're spending
I
money
don't
on.
care.
But if there's large cash deposits or large cash withdrawals, that will make the underwriting go ping. What is going on here? Thank you for the hearts. I appreciate it. Thank you for balloons. I appreciate you guys.
Thank you
We
guys.
are not on Facebook. Facebook gave us this morning.
Yeah.
Facebook gave it. You know who gave it to us yesterday? We thank you for letting us back on. Instagram gave us this morning. TikTok gave us this about 2 weeks ago or 3 weeks ago. Sometimes the platforms don't like what we say. I don't know why, but they don't like what we say. Whatever.
Got a lot of questions
Yeah.
in here,
Okay,
guys.
cool. We're gonna catch up on your questions.
Hang in there. Don't leave. We're going to
Yeah.
get to all of them, okay?
All right, cool.
All right, next one. At what point will bank statements be needed?
If you do a bank statement program, immediately. But if you're getting qualified, I can get you qualified based on your word, but before we actually send you out shopping, I need to see POF, proof of funds. Or if you tell me that your mom's giving you $10,000, I need to know that your mom's got $10,000 to give you. So I can start the file, but I can't actually send you shopping till I have material evidence.
And I recommend start the file.
Yeah, start it.
Don't wait till the bank statements
Don't
come
wait.
in.
Yep.
Even if it's a year from now. So we put a guy into a house probably about 2 months ago who was waiting on a family settlement for 2 years. We got him pre-qualified 2 years ago, and we put him into a house in December. So never wait, guys. Start now.
By the way, we have really trusted realtors who will say, hey, listen, can you do the take sheet right now and then tell me whether or not I can offer tonight? And I'm like, okay, cool. Let me see. I'll do the take sheet. I'll build an Encompass real quick. I'll say he says he has $30,000 in the bank. He says he makes $600,000 a year. He says he's got this. He says boom, 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 boom. Based off everything he says, I got a DUAUS, which means yes, we can go do it. And I say, hey, Mr. and Mrs. Realtor, I appreciate it. Yes, as soon as he gives me the documents and I can match all this up, I can do this tonight. If he gives it to me right now and they are what he said, boom, shopping right now. It happens because sometimes you're in a pinch and you want to get that house, and that happens, and that's why you use us.
Haiti Love Cran. Situation, 2 borrowers.
Okay.
Combined income, 200 G's.
Damn.
630, 612 credit scores. What can we do?
Okay, so Haiti Love, dude, you moved it right. I don't know what it is. Haiti Love.
Haiti Love Cran.
Haiti Love Cran.
Cranberry?
Okay, Haiti Love Cran. Usually I would tell you, hey, listen, we got to go FHA because 580 starts at FHA. However, because that 612 is so close to 620, and there's actually a few programs that will allow me to do blended credit. If I just did simple math and I said 630 plus 612, I'm going to be at 621 in a blended credit situation. Not all loans allow this, but some loans allow blended credit, which means I get to blend both of your credit. Simple math says you're at 621. 621 says Fannie Mae, Freddie Mac. 200 grand says 800,000, 820, 850 maybe in purchase power. I don't know how much you have down, but I would say we got to get this thing going right now.
Heck yeah. What's up, Team Sanchez?
Team Sanchez, great to see you.
Can you help refinance my HELOC into a home equity loan as a second loan? So can we take your HELOC to a second? I think so.
Do it.
I think it's absolutely possible. Give us a buzz, man. JC Realtor? Yeah,
Yep.
Realtor. For all states?
For all states, all 50 states. It used to be we could not do New York, but recently we're able to do New York. And not only that, because we're such a big bank, we're doing a series right now on our TikToks where we pull the down payment assistance programs for each state, and we actually name them. I'm trying to do every state. Every time my tech person comes in, I'm like, hey, let's do these 5 states. And we do the 5 states. So we pull the programs. We make sure New American Funding is a authorized lender in that area. And then we put the program out. So yes, all states, and we help with down payment assistance.
Did you do that state way down there that's hanging off by Cuba? You know
Florida?
Yeah, you do that one?
Yeah.
What about that one up in the top right corner that's really cold? That's next to Canada.
New England?
Do you do that one?
Yes.
New England's not a state, man. Maine.
North Dakota?
Maine.
North Dakota? New
Maine.
England?
North Dakota's in the middle.
Where's New England at?
We need a geography lesson.
All right, we do need. What's geography?
Team Sanchez give you a chili.
What's up, man?
Maney. That's a
Alyssa
cool one.
Riley shared the live. Thank you very much. Asada Riley, 358. We are here for you. We appreciate you guys trying to get you a house in 2024.
Maney, going to real estate full time. I have $200K to invest, but not working. Can I still get a mortgage?
200K full time. Maney, we got a problem. Houston, we have a problem. Maney, we have a problem. Almost all loans are driven off of income. So we need some kind of income. The fact that you have money, that's an advantage. It's good. But people think I have money, can I get a loan? Well, they're like, it doesn't, no. If you had enough money, why don't you just buy it? Use your money. No, you need a loan. In order to pay the loan back, we need income. So there's different ways to derive the income. Like for instance, DSCR. DSCR does not go off of the borrower's income. It goes off of the property's income. What? Yes, that's a thing. DSCR. DSCR, you're probably going to need 20% down. Sometimes 15%, but most of the time, 20% down. Now, if you have 200 grand, then that seems a doable situation for you, and you're able to solve the income issue by going with certain types of loans. That one's a DSCR.
All right. Leo El Conejo. I'm Leo. I'm 22. Truck driver from Florida. I'm trying to buy my first home. Credit $775, $15,000 a month. Leo, you got it going on, man. Good
Leo,
job.
15 G's a month,
Good
15
job.
bands.
Look at his credit,
Dude,
man.
15 bands and a 775?
22
And you're 22 years old? Shit, boss.
This guy's going to take the world by the horns.
Respect. Yes, you can buy a house. How you file your taxes for OTR, over-the-road truck drivers, is very important. If you're W-2, it's pretty simple. But if you're 1099, which most truck drivers are, here's something you need to pay attention to, Leo. Leo, really pay attention to this. If you're an owner-operator, I can add back in depletion and depreciation. Let me say that again. I can add back in to your income depletion and depreciation. Now, if you're an owner-operator, you get to choose how you depreciate that truck. And if you depreciate it in a way that's favorable to you, that gives you a heck of a lot more buying power. Like a lot of buying power. But you have to know that before you file your taxes. Because if not, your accountant or CPA is going to go, hey, we're going to take all this stuff and move it around so that we pay the least amount legally possible. And that's right. But if you tell your CPA or accountant or whatever, hey, I want to buy a house. My loan officer says they can add back in depletion and depreciation. What can you do? Now, if you got a good CPA or accountant, they're going to go, let me see. They're going to twist their mustache a little bit and go, ha, you're about to make a lot of money without having to pay a lot of money. That can happen.
Navy mom said, when did Lee get an Apple Watch? I said
an Apple Watch?
I seen the same thing when I see it in the thing. I'm like,
no.
That don't look.
It's not an Apple. Not an Apple Watch. Not an Apple Watch. During a better time, I went through a watch buying phase.
He likes to get his text messages instantly.
No, it's not. It's called Rado. Rado.
It's
it's a European watch brand. Thank you for noticing. But it's a European watch brand that's not very popular in America. I found out when it's time to service it. It's really hard to find somebody that's authorized to service Rado. Rado is like, it's kind of like, it's not Rolex, but it's kind of like Movado, higher end in Europe.
So, what time is it, man? Is it
Dude,
time?
I don't freaking know.
So you get
It's
your text messages, you get your emails.
It's 12:15 according to
Times are tough,
You know
guys.
what the one
Times
thing
are
is?
tough.
I'll give you this, man. Rado is always right on the time. Rolex is never right on the time. Is your Rolex ever right? Ever? Never. Never
Garbage
right. Always for telling time.
Even so, you got to keep moving.
Yeah.
If you have a Rolex, you
Yeah.
have to keep moving in order to keep it alive. But even then, still the time is horrible.
Yeah.
Oh boy, Lee and his watches.
Oh boy, look
The
out.
blessed
Here we go.
investor. Add an authorized user with high credit card and low utilization.
Yes, that's a
Bumping
great
credit
idea.
scores.
That's an amazing credit hack.
Never
That is.
free. It's added in.
Yep.
Ariana, interest rates are usually higher with DPA. That is a fact. Rosie.
Yeah. Well, wait a minute. Cal Haffa right now would probably be competitive on the Cal Haffa 3.5%. Normally, you're right. On about 80 to 90% of them, they're higher. But we do have one that's market and sometimes even a little less.
Rosie, nothing in life is free without giving someone in return.
Rosie, you're smart. I really like you, Rosie.
Plus PMI, said the blessed investor.
Yeah, don't forget that.
What would that typically run doing DPA? Deep thoughts on TikTok.
Deep thoughts on TikTok.
So you want a DAP rate?
Yeah, okay, so he's going to pull Cal Haffa, right? Pull Cal Haffa? Yeah, pull Cal Haffa. We're going to tell you what the Cal Haffa rate is today, right now, at this moment. If you're an authorized lender, you can get 6.625, and they will help you with 3%?
3.5%.
3.5% at 6.625% rate. That's pretty good. It's not, I mean, for the market, it's pretty good. You will have to pay it back. There are programs, and Cal Haffa does throttle back your buying power. Forgot that part. If you were pre-qualified for $400,000 and you said, hey, I'm bringing in my own 3.5% down. I'm saying, hey, cool, go buy a $400,000 house. I want to use Cal Haffa. All right, cool. They throttle back your buying power, probably 340. Instead of 400, you're now qualified for 340. But wait, Lee, why would they do that? Well, they will actually help you with the down payment. They'll give you the down payment. Not give it to you, you want it back, but they'll give you the down payment. But they won't let you push it to the red line. They won't let you max it. That makes sense, right? And everybody's like, well, since you put it that way, yeah, I guess so.
How's your heart rate? Check your watch.
Oh,
What would that typically run doing DPA? We got that
just
answer?
did it, yep.
Okay, the version I'm not having. Yeah, skin in the game. That's what it is. You need
Yes.
skin in the game.
Yep.
Thank gosh I don't live in California, said Ash 1992.
Yeah, where do you live, Ash 1992? Yeah, I would say I don't live in California, but I do. I have a house here. I have a house in Texas. I like Texas. I like Texas better. Yeah.
User 9403. Wait a minute. Until you don't have a mortgage, don't own shit.
You still don't, dude. Even at 9403, try not paying your property taxes for 3 years in a row.
No, they're
See-
saying until you have a mortgage, don't buy stuff. That's what they're saying.
Oh, okay, got it. I was about to get all conspiracy theory on the system.
No, that's-
I'm like, because you don't own shit, man. Try not paying your property taxes. Watch what happens. They're
Oh.
like, hey, you think you don't know? You think you own your house? No, you don't. You don't. State stepping in and taking it. We'll give you some money because we kind of like you when you paid it off, but it's our house.
Gabriel needs a side hustle.
Dude, Gabriel, you need to talk to us. You need to reach out to us. We make money. The other day, I walked into Chris and we just got a check in the mail. And I'm like, hey, Chris, check this out. And he's like, where did that come from? I said, I'm going to leave it with you for a minute because I want to see if you can determine where it came from. And about 30 seconds later, he's like, the side hustle. I was like, yeah, this one pays us through check over the mail. I don't know.
Yeah, weird, but
Yeah, it's weird. But hey, it's kind of cool
Whatever.
to have money just come in. Yeah.
Hamzat Hit. How much do you need to qualify for a $1.6 million house?
So, well, you need 20% down to start. So, 1.6 million, you need $320,000 down. If you have that in cash, then we go to the next thing, and the next thing's probably gonna be about 400,000 in income, somewhere in that range, 400,000. But there's gonna be a lot of things that change that because those are jumbo loans. Jumbo loans are not conventional conforming, traditional FHA, Fannie Mae, Freddie Mac, VA, USDA. They're not traditional, they're jumbo. And at that level, you're going to need 20% down. You're like, wait, can I get away with 3.5% down? Not at that level. No way, no way, no way.
D asks, what's the difference between buying an investment property versus a home? A home to live in, I'm assuming. So
D, here, I'm going to think this through because this is a good question for everybody watching. When the banks, they lend based on risk. So, D, if you packed up, let's just call you have a husband and 2.3 kids and a dog. Dang. So D, you packed up your husband, 2.3 kids and a dog and you bought your primary residence. Cool. Now you all live at 123 Main Street in your primary residence and things get tough. Are you going to pack up your husband, 2.3 kids and the dog and move? Or are you going to dig down and try and fight and keep that house? You're going to dig down, fight, and try and keep that house. So that's your primary residence. Now, let's say you have your primary residence and an investment property. And that investment property, well, you invest it. And then all of a sudden it's upside down. And you say, you know what? I don't even want to make that payment no more. And you just stop making the payment. Do you have to move your husband, 2.3 kids, and the dog? You don't. Does it really affect your life other than you lose a little bit of money? Not really. You lose some money. And then the bank has to foreclose. And then the bank's at risk. Balloons, thank you very much for the balloons. So the bank's at risk. So the bank looks at them different. If you're moving your husband, 2.3 kids, and a dog into your house, they're going, all right, we get you've got your family here. It's equity by you living there. So you're probably not going to default on that unless things get really bad. Really bad. So they compensate for that by saying, hey, listen, you can get in with 3.5% down. We'll give you FHA, we'll give you VA, we'll give you USDA, we'll give you all those things. So that's your primary residence. If it's an investment property, you can walk at any time. So the bank says, okay, you're buying an investment property? Yeah, you could walk. So we're not going to do this unless you put 20% down. 20%
Skin
down.
in the game.
Skin in the game. And VA, which is a federally driven program, says, yeah, now we're not touching that. You can't do VA. FHA says, yeah, we're not touching that either. You can't do FHA. USDA says, yeah, we're not touching that either. You can't do USDA. So you can only do Fannie Mae, Freddie Mac on those programs for the GSEs or for your conventional conforming loans. That's the difference, the long version.
Do you guys do home possible loans? And do you know the reserve amount for 2 to 4 units?
So first answer, yup, home possible. What does home possible mean? Oh my God. So if you went FHA, you would need 3.5% down. If you went home possible, which is Fannie Mae or Freddie Mac, which one is it? Home possible is Fannie. Fannie?
I think so.
Fannie. So home possible is Fannie. Traditional, conventional, you need 5%. But occasionally, there's a one-off program called Home Possible where you only need 3%. What? 3% down? Yes, 3% down. Now, here's the catch, and it's a big catch. And unless you're an experienced loan officer, you don't know this. If you're trying to do a home possible with a 640 FICO, the MI is going to get so ridiculously high, probably not worth it. If you try and do a home possible with an 800 FICO, your MI is going to be so low, it's damn sure worth it. So your credit score counts more for a home possible or a home ready than anything. But can we do it? Yes, we can. Most of the time, people that are doing this don't have that 800 FICO. So I say, listen, you're better off with 5% down because your MI is going to be way cheaper because you have more skin in the game. Can we do 2 units? Yes, we can. With home possible and home ready, yes.
Amy Lee, 1691, said 480?
480.
Credit or income?
$480,000 income will get you that $2 million house if that's you. If you have a FICO of 480, we really got to work on that. You're not going to get anything.
Yeah. Thank you guys for the love. Thank you for the hearts.
Yeah,
and
we
the
appreciate
follows
you guys.
and the shares. Keep doing that, please. Yes. It keeps us in the algorithm. So we get more people asking questions.
We're trying to get you a house in 2024 and give you real-time situations, guidelines, real advice. We're really trying to help you. Bear in mind, when we give interest rate quotes, it's not your quote. This is what New American Funding is putting out or a scenario that we did. The only way we can do your quote is if we pull your credit, calculate your income, your assets, and build your file. By the way, my NMLS is 944254. Chris's is
1066958.
So any of you are trying to say you don't put your NMLS out there, yes, we do.
Do y'all work with VA? Asked Sparkly Nickies.
So that's either Virginia or VA loan. One, if it's Virginia, yes, I love Virginia. Funded 2 loans in Virginia in the last 6 months. Veteran, VA loan, I'm a veteran. My dad's a veteran. My son's active duty, special forces, badass kid. Yes, we do VA. Yes, we will help you with. And by the way, we do so many VA loans. I would say we're one of the best in the country. We'll teach you things you didn't even know existed.
Rosie, following for when I'm ready, getting my credit up, currently 580. Rosie, I say you get pre-qualified now though. Give us a buzz. Let's get you started and figure out any challenges that we need to solve and put you in the right direction of fixing and getting that credit better.
And does she really know if her score is 580?
Probably not. Probably
why?
Not.
Tell me why. Why do you think?
You're probably getting your credit from Credit Karma or one of those apps that's connected to your credit card or one of those versions of those simulators, which use a different FICO, which is usually FICO 8 for credit cards, and we use FICO 5 for mortgage. So if you pull your mortgage credit, you might have a little bit higher or a little bit lower. So it could not be 580. So I recommend you reaching out.
Cool.
The Blessed Investor. Can you share what it looks like to be proactive in the process of buying a house? What comes first?
The Blessed Investor, almost like you set that up for us, man. Like you set it up and then boom, slam dunk. Bam! Okay, first thing you need to do is get pre-qualified. Yeah, before you find a realtor, before you start looking for houses, get pre-qualified. Why? Because once you're pre-qualified, we can shop you to a realtor. Even if you have a realtor, that's fine. They're going to tell you, get pre-qualified. So the first step in being proactive is to get pre-qualified. Then you actually know what you should be looking at. I can't count how many times I've had a buyer call me and say, hey, Lee, I just love this $600,000 house. I'd like to put an offer on it tonight. And I'd say, cool, yeah, I want to help you. Absolutely. And then I have them send their income in, pull their credit, build their file, and I say, okay, the good news is I did get you qualified. The challenging news is you're qualified at $400,000. And they're like, but Lee, the house I want is $600,000. I say, yeah, I understand. I do understand. That's the house you want. I'm telling you based off the numbers and the most I can push it to, $400,000. And they're like, all right, Lee, if that's all you can do, we might go look at another lender. I said, you can if you want to, but you're going to get $400,000. We all use the same calculations. There's only a few differences, but we all use basically the same calculation. And they say, okay, cool. Thank you. Have a great day. And then they never shop again, or they don't come back for a year. Here's what went wrong. They started looking way out of their price range before they should have started looking. Now, if they'd have came to me first, I would have said, hey, listen, you're qualified for $400,000. I have a realtor who's a top producer in your area. I'm going to have her call you and send you all the houses for $400,000. Now, every house that you look at, you're qualified for. But if you go first and you start looking at a house, you're going to break your own heart, and then it's going to be 6 months to a year before you recover. I've seen it happen. Happens. You seen that?
Yeah, all the time.
All the time.
All right, dude, we need to go a little faster.
Dude, I'm trying,
Misha,
but I have to put out the good information for the people.
Remember that little faster thing I just said? Misha, what does your credit score need to be to buy a home?
580.
Mariana, I want to get a house in
580
Hesperia,
FHA, 620 Fannie Freddie, 500 if you have a 10% or more down payment on a FHA, or doesn't matter for VA. If you have VA, there is no FICO requirement in the VA loan.
Mariana, I want to get a house in Hesperia, California, but how can I do it?
You buy it.
But how?
Do you want me to make the simple version? You buy it. Just buy it. That's all.
Call Chris or Lee.
Yeah, you can call Chris. He wants the longer version, so call Chris or Lee. Yeah.
See, I said a little. I didn't say rapid.
Okay.
I didn't say rapid.
All right, we're not a rapid fire. Okay,
faster.
so Mariana, you call us. We get you qualified. 3.5% down for FHA, or we'll check and see if you qualify for a down payment assistance program. Whatever you qualify for, we'll put it all on the table, and then you make the call.
Larita 562. What if you don't have cash in hand for down payment? Can you still get qualified?
You answer.
Yes.
Okay, cool.
We have down payment assistance programs, guys. We can hook you up with one of those. Culturally Crowned. How can you afford at $64,000?
$64,000 house. We don't do $64,000 loans. If you have $64,000 income, that's going to depend. You could be up to $250,000 house. I can tell you that I closed a house not that long ago in Arkansas for probably $180, $200, somewhere in that range. Beautiful home, beautiful home. So it depends on where you live. In California, Los Angeles, you're not going to get anything with $64,000 a year. But I didn't have to tell you that. You knew that.
But
don't ask me.
They might have a co-signer.
Damn.
They might have a co-signer.
Yeah, you could have a rich uncle.
Very popular.
Maybe he's an actor. Yeah, maybe. Anyway.
He hate him 3. Requirements.
He hate him 3.
See, I was reading this yesterday and I couldn't get it, but now I got
cool.
it. He hate him 3. Requirements to purchase a vacation home in Texas. My first home is paid off. 689 score. 110K salary.
You want me to do it?
Yeah, go.
Okay, cool. So you're talking about a second home unless it's your primary.
Vacation.
So
Yeah.
if it's a vacation home, it's your second home. Second home.
vacation
And it
in
has to
Texas?
make sense. It has to make sense. I've had people go, hey, listen, I got my house here and I'm trying to buy my second house 2 miles away. I'm like, that's not a second house. That's an investment property. But if you live in Dallas and you go to Lake Travis, I have a house on Lake Travis. If you go to Lake Travis and you say, hey, listen, I live in Dallas and I just like to go to Lake Travis to be on the lake. So I want to buy a home. That qualifies as second home. You need 10% down. And here's a special thing about second homes. You do need reserves. Reserves are, can I make the payment for both my primary, you said it's paid off, but both my primary and my second home for at least 6 months. So let's just say that's $5,000 a month combined, or in your case, maybe $3,000 a month. 6 times 3, 18. You have to have $18,000 in an account somewhere. It can be stocks, bonds, 401k, IRA, 403b, KEO, 457, TSA. There's a whole bunch of different things it can be. You don't have to touch it, but I do have to show that if you lost your job and all your income, you can make the payment for 6 months. So second home is pretty simple, actually. You do need a higher FICO score. Did he say his FICO? Yeah, 689.
Yeah, 689.
You need a 680. I prefer 700. 680, you'll get decent pricing. 700, you get better pricing. I'll help you get that up 11 points. That's pretty easy. I can help you get up 11 points, and we can do this. 110K salary says you are going to be in the neighborhood of 450, somewhere in that range. Let's make it happen.
All right, now we're rapid fire, man. You ready?
Rapid fire, dude. Rapid fire.
He hate him 3, 375. We're still
I
fit
just
into
gotta
that. No
stop,
worries.
dude.
Niche
I love
love.
that.
What FICO do you need to buy a home?
580 FHA, 620 Fannie Freddie, no FICO requirement for VA, doesn't matter, and USDA 580.
Sparkling Nickies said yes, it's a VA loan when they said VA, not Virginia.
Ah, dude, that's VA loan, man. I want to help you. You need a loan officer who knows what it's talking about, because there are so many benefits on a VA loan.
You're welcome. He hate him 3. We're here for you.
Cool.
46K a year, $800 monthly debt, 700 credit score, first time home buyer. Roughly, what would we be approved for?
46K,
It's
46K. You're probably 180, maybe 180. 190. It's a little different. Yeah, there's going to be some things that I have to factor in, like property tax base, and if there's an HOA, it's going to change everything, like everything at that level, HOA. But yeah, well, let's talk. Let's figure out if there's a house in there. Conventional
Mommy
interest
of
rate.
Zero. Yeah, conventional interest rate.
Conventional interest rate right now, 15-year fixed, 5.75. That's what New American Funding is telling everybody, or 6.25 on a 30-year fix. Don't believe me? Go to the links at the top. Go to Cool Stuff. Today's interest rates. You'll see New American Funding's rates.
Larita 562. Who do you contact to get pre-qualified?
Chris or Lee. For a first-time home buyer, call Chris and Lee. You can call Chris or Lee and Chris, or Chris and Lee. Just call one of us. We'll help you out.
Team Sanchez. Do home equity loans have a limit? 500K, 600K? Can I get it for 30 years?
HELOC, probably not. Not 30 years. Do they have a limit? We've never seen it.
Yeah,
it's DTI. Oh, no, it's LTV. It's LTV. It's loan to value. So the limit is the value of your house minus what you owe minus the guideline. That's the limit.
The Waterboy Preston. You say there's no FICO on VAs. Is there a certain lender to go through for that?
Yes. If you, us. The Waterboy Preston. Yes. If there's lenders that say, hey, there's a FICO requirement for VA. If you actually dig into the VA loan, technically there's no FICO requirement on the VA guidelines. However, if you're a smaller lender, or if you're a broker or a smaller bank, they have something called overlays. That's the bank's overlays, because they are not VA direct. New American Funding's a big company. We're VA direct. Technically, we don't have those overlays that other banks do. So you should come to us because we're badass. But if not, any large lender that's VA direct there is no guideline. So if some loan officer's telling you, hey, listen, the guideline says it's their guideline for their bank. It's not the VA guidelines.
I have no credit at all. Got 10%. Can my dad co-sign? Val.
Ooh, if you have no credit at all. Very good situation, Val. Sounds horrible, but it's not. Because if you had 480 FICO, I'd say you're done. But if you have zero, like literally, I pull your credit, it says NA, NA, NA. I can use something called alternative credit. Alternative credit is you pay bills right now. You pay the water bill, the electric bill, the phone bill, whatever you pay, there's bills. I have to prove that you've made those payments for the last 12 months on time, and then I use something called an alternative credit profile. And yes, your dad can co-sign.
Maverick, who qualifies for a VA loan?
VA loan is a honorably discharged veteran as long as you met the requirements. So if you went in and you got discharged after 30 days, you don't meet the requirements. So you have to meet the requirements. I think it's 133 days. It's 166 days. I have to get the exact. But you have to have served a certain amount of time, or 1 day in theater. 1 day in theater means you were in war. There was actually bullets somewhere in your vicinity flying. At that point, they say, hey, listen, you're a veteran. Even if you only spent 1 day in theater, you're qualified.
Do homeowner-occupied loans require 1 year? Level up mindset.
Homeowner-occupied.
Owner-occupied.
So if you went FHA, they do want you to live in it for 1 year. If you went VA, they do want you to live in it for 1 year. If you went USDA, they do want you to live in it for 1 year. So I think that answered the questions.
Not
conventional, we don't give a shit. Yeah.
How long does it take to get qualified for a DPA?
First, we qualify you for an FHA or Fannie Freddie. And then right after that, we see if you fit the guidelines. And it's immediate once we know that you're qualified for a FHA or Fannie Freddie.
Waterboy Preston said, Veterans United Home Loans told me you have to have at least a 620.
Yeah, Waterboy Preston, you get to choose who you use as a loan officer. And I'm telling you, do put it, if you want to just beat them up, just put it in Google. And there's actually va.gov. You can find the guidelines. You can dig in. Unless you're a loan officer, there's no real reason to. Just find somebody who knows what they're talking about. But there's a loan officer I follow on TikTok who hates Veterans United. Hates them. Like fires at them. And she beats them all. I gave it away a little bit. She beats them up over and over and over and over again. And she's right every single time. And I'm like, oh, wow, that's insane. That's insane. This woman really knows her stuff. But so do we. And if you want somebody, like, the good news is in today's age, you can compete. You can put people up against people. If you think we're full of shit, move on to somebody else. But if you think we actually know what you're talking about, we do business in all 50 states, and we will fight for you and help you.
Okay, so the rest of you, if you want to get your questions answered, you're going to have to text
Dude,
one of these
you're going to kick me off, dude?
Because I'm Chris, and that's Lee.
We've been Chris and Lee. We appreciate you guys. We're out.